In this video, I want to talk about taking up the very first activity we did with that sort of financial analysis tool, that spreadsheet. So this is not really how to do the analysis. I just want to make sure you were able to do it. Obviously, it marked itself, but it's just a couple comments I wanted to make about constructing it or using it. The first part of it, you can remember there's a couple other tabs that I haven't explained yet, but I will. So the first thing you needed was this. You needed this annual report for Kira. Key, notice the date. This date right here, you needed that because you need to come up with a stock price after, that was the date of release, right? So this is for the period ending December 31st, 2019, but this didn't come out until February 26th. So that's the date or the day after where the stock might have gone crazy up, down, all over the place until it settled out at what the market thought it should be worth on that date. So you want to use that day later on. So remember that. So going on from the scavenger hunt activity, you should know that the financial statements start on about page 60 or so. So I think this is 62. I can't remember. But this is the income statement, right? So consolidated statement of net earnings and comprehensive income and whatever it's called under international rules. So if you haven't yet figured it out, this is why we learned the new parts of the income statement first. Because being able to pull what you need from the statements is a little tricky if you don't know the new parts. So take a look up here at the values and then the values I have on sort of this answer key. So if you can't get these numbers, here's what you should have. Revenue is simply right from the top, right? And remember again, denominations, this is 3.6 billion, not 3.6 million. Second, cost of goods sold or cost of revenue is a common name. But if it's not there, that doesn't mean it's not actually there. It's whatever's used from gross revenue, whatever's subtracted to figure out some kind of gross profit or an sometimes called your gross margin, or in this case, operating margin, right up there. So that means this next number here, second, is also second here. It's this number right here. Okay, so this is your gross profit or operating margin in this case. Notice it's not on here. You don't need to type it in because the spreadsheet will figure out what it is if you've got these two. It's just the difference. This operating expenses are not listed, and that happens a lot. There's sometimes just things that are left out because it's understood where they are and what they are. So this is actually the total of all of these things, right? So these numbers right here should total. Notice what's positive and negative in this tool as well, right? Because you're going to jumble a bunch of things together. Things that add to your wealth are positive and things that take away are going to be negative. So your expenses are all negative and your revenues will be all positive, right? So if you take your revenue and you subtract, you remove this and you remove your operating expenses, you should get this. Okay, your continuing net income, no taxes. I don't actually have those on there, but that's okay because they're not needed in any of our ratios or anything, right? So that's why it's not there. So if you look, this number right here is this one. So this is continuing net income. You'll notice earnings before taxes, then your taxes, and then this would be in from continuing operations. And then you would have your discontinued items and your extraordinary things, but this company doesn't have any. And then you have your final net income. And then under international rules, this comprehensive stuff down here at the bottom is actually things that you don't do in Canadian GAAPs. So in other words, raising the value of assets if the market value has appreciated in a permanent manner over time, or in this case, currency translation, right? So gains and losses from currency that you haven't realized yet, and that sort of thing. Well beyond the scope of this course, but that's what comes after. And so that the very, 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 very final number, this comprehensive income, is kind of a measure of your change in total wealth, in some cases on paper that you haven't realized yet, as well as real actual change in wealth from running your business, having sales and expenses. So we care more about this one, right? In this case, this is our continuing income, but it's also our final regular income before the comprehensive international stuff. Okay? So this earnings per share, you don't want to really calculate that because the number of shares outstanding changes during the year. So the company is much better at coming up with a good number for that. So usually you pick diluted, but if they're the same, it doesn't matter. Basic is also fine too, because most companies, it's not that different. Right? The difference is diluted is if there's any executives that have been given stock options as part of their pay, if they were to use them all and those new shares would have to be issued, there would then be more shares out there. So that would dilute the ownership. That's what diluted means. And the last thing you're going to look for then is on your cash flow statement. Look for your cash flow from operations, which is it's right at the bottom of the first section. That's easy to find, right? If we scroll down, you should see it right here. Cash provided by operating activities, 887, same number. Next one, dividends. That's almost always in the financing section. Here it is at the end. Dividends paid to shareholders, right? $393 million paid out. Notice it's negative because it's a payment out of the company, right? And then you've got these quick assets. Balance sheet, I think, was first, so we'll scroll up. Quick assets are those listed above inventory, and that's these three in this case. And then you'd grab your total current liabilities. Those are often shown, and then the long term are not. They're not titled or totaled, I should say, right? So in this case, they just have total liabilities. This is common, and they have total current, which means the difference between the two is the long term, right? But again, you don't actually need to write long term down because the spreadsheet figures out the difference between the two. So you just write down this total right here. And that's it. That's all you have to find. The only other thing you have to find is this stock price after this information was released. And as I said, that was February 20 something or other, right at the very top. I think it was the 26th. So if you go to say Yahoo Finance that has for free historical prices, that's easy enough to figure out, right? It's just going to be the closing price, which means the final price of the day. And you would just pick the date range right here and find the close and type it in. That's it. So this video is not about how to interpret what you end up with. It's just how to actually build it. So the next thing we're going to do is go on and start to talk about how to do an analysis. And then we'll come back to actually interpreting this and including some of the new things we've learned about receivables and inventory. All right.